Raoul, what's on your mind? What are you looking at right now?
So the ongoing narrative, I think, if people have been watching the daily briefing for a while, is that my hypothesis is a slowdown, not just the US, but globally. And that the piece of data we saw today is just an outlier in a general trend of data that is getting weaker. The Citibank Economic Surprises Index has gradually fallen below zero as the trend of data has got weaker. That is a basic lag from the Chinese economy, which is weak. And we've seen weakness within parts of Asia as well. I think that goes forward, and that's a lot to do with demand brought forward, and the high rise in prices has caused a complete collapse in demand in certain goods, particularly big ticket items. Secondhand cars, housing, and general large consumer durables have seen consumer confidence fall, and things like buying climate at all-time worst levels. So people have thought, yeah, we will see this flow through in terms of consumption patterns. We've also got the story that you and Weston broke a long time ago, which is the story of Japan, the Olympics, and COVID, and a total screw up there, having dealt so well with the virus and then opening the borders for the Olympics. And it seems that half the bloody athletes have got COVID. So that's now spread like wildfire through the Japanese population. Don't forget, Japan is the third largest economy in the world, and this really matters. Because again, it may be supply issues. It's just all at the margin. It's not like COVID, that the Delta variant is going to take over the world. It's going to be like March again. What we're talking about is a rate of growth that is not as fast as it has been. And I know Jim Bianco had the same view yesterday. Eric Basmagian today on Real Vision Plus, talking to Jack, had similar views. David Rosenberg has got similar views, and all of us believe that the economy, ex-stimulus, after the sugar rush, tends after recessions to be weaker for a period of time, and generally that leads to more stimulus. And I see that story playing out in front of us. Bond yields spent most of the time falling, and then had a two-day kind of screaming rally higher as we go into non-farm payrolls, and my guess is they drift off next week again. They'll consolidate sideways for a while around these levels and then make the push down to 1%, I think, is the next thing. The other big news of the day that is incredibly not noticed anywhere is that the dollar broke that huge inverse head and shoulders pattern that I've been talking about, and the euro has a perfect head and shoulders pattern at 118, 117.5, which it broke today. And it had touched the trend line before, bounced, and then broke below it now, or just to it now. That would suggest that the euro could go to 110, and we've got a hell of a strong dollar rally to come, which is commensurate with a risk-off phase. So it's something I've been looking at, writing about in Global Macro Investors and in Real Vision Pro, is that we should be long bonds, long dollars, because this kind of environment will see that happen. Also, the other thing I've been looking for is growth stocks to start outperforming, and that's been going on too. So the markets are confirming my narrative. Let's see if that continues, but that is really, really what, in the macro world, I've been focused on.
Yeah, you're a dollar up to 122 in May, now down below 118. That's a big move.
It is, and I think it's going to go much faster. I think the dollar is going to go a lot higher suddenly. What's going to be the catalyst? I don't know. China is not good right now, and also what's going on geopolitically with China and within China are not comfortable for markets. There could be capital flows from there. Japan also, dollar yen's a notoriously difficult beast to trade and has been trading sideways. But if Japan has to come in and stimulate because they've had to shut down their economy again, well, there's a chance that dollar yen moves out of the range that it's been in for a while, and maybe moves up towards the kind of 120, 130, and starts going higher. I don't know, but that's always been a risk for me. So macro is back in play right now. The inflation trade has faded away. There are some structural trades in oil and stuff like that remain relatively strong. And I think Tony and Tracy today on the platform on Real Vision Essential on Oil Week talked about how bullish the oil market is. And I think that's probably true.